Okay, good afternoon everyone, and welcome to CoreNet Global and BritCham Singapore's 2021 Asia Market Outlook. Thanks for joining us this afternoon. My name is Caroline Burns. I'm the Managing Director and Founder of Workplace Revolution, and I'll be your host for this afternoon. I'd like to start just by acknowledging the Singapore chapter sponsors first. Our platinum sponsor is ISS, gold HNI, and our silver sponsors, Zenith, Instant, and Unispace. Thank you, of course, to our sponsors. Before we get started on the panel session, just a few housekeeping notes. You will be muted during the call. You should already be muted. If not, please do so. I will probably have to mute myself at some stage. We've got mosquito fogging happening in about half an hour. So if you hear a weird buzzing sound in my background, that will be it. Please pose any questions that you might have for the panelists in our chat function. I'll try and answer as many as possible as I actually go through the session. If the discussion gets quite deep in the session, then I might hold off and leave a few questions till towards the end. If there are any unanswered questions, then Emma has said she'll take note of those and she'll get answers after the session for us. After we have had the panel discussion, which will be about 40 minutes, there'll be a 10-minute sort of networking and topic discussion breakout session. So everyone will automatically be pushed into small breakout groups, so probably between 5 and 10 people after the panel Q&A. So please bring your opinions to that. We know you have them. And also please, for that discussion, please make sure you've got your video turned on so that your colleagues can kind of see who they're talking to. But we'll tell you a little bit more about that when we get there. But for now, let's welcome our 4 panelists. In no particular order of age, good looks or intelligence. Our first panelist, Michael Smith, is the Regional Chief Executive Officer of Europe and the US for Mapletree. He's responsible for new and existing businesses in Europe and the US. He's also a non-executive director of Mapletree Industrial Trust Management and a member of the Singapore Stock Exchange Disciplinary Committee. So I will mind my P's and Q's today. Prior to joining Mapletree, he was a partner of Goldman Sachs, heading up the Southeast Asia investment banking business, as well as the bank's Asia Pacific real estate business. As one of the pioneers of the Asian REIT industry, Mike's been involved in numerous REIT IPOs, including the 4 Mapletree REITs on the Singapore Exchange Limited. Our second panelist for today, Charles Reid Anderson, is one of Asia's leading technology industry innovators and thought leaders. His in-depth knowledge of emerging technologies and his understanding of the market provide him with a unique ability to separate industry hype from reality. So hopefully we'll get a little bit of that today. His pragmatic and vendor agnostic approach provides him with a unique ability to make him a valued advisor, to influential decision makers across the tech ecosystem. Charles is also a prominent keynote speaker. He's presented over 200 industry events globally, sharing his insights on IoT, smart cities, prop tech, digital transformation, and 5G as well. Our third panelist, Brandon Aitken, is probably known to many of you. He's the real estate portfolio strategy lead at Novartis for APAC, China, and Japan. In this role, Brandon's responsible for transaction, workplace, and occupancy strategy for the region, including the rollout of the latest workplace standards and associated change management program for Novartis. He's been with Novartis for 2 years, where he previously had the role of real estate management lead. And prior to Novartis, he worked with Cushman & Wakefield in Toronto and here in Singapore as well. And last but definitely not least, Tricia Song is a director and head of research at Colliers International in Singapore, with over 17 years experience in real estate equity research and capital markets in Singapore and ASEAN. Before Colliers, Tricia was a lead analyst for the Singapore real estate and REIT sector at equity research at Barclays Bank. She was a lead analyst on various IPO pre-deals such as Ananda Development, IREIT Global and Capital Malls Asia as well. And she's got prior experience in private equity working on M&A deals as well. So a very highly qualified panel, 4 very different perspectives broadly on kind of property, real estate, corporate real estate and finance industry as well. So I'm sure it's going to be a great discussion as well. What I'm going to do now is hand over to Tricia. She's going to share some of her research insights with you before we then move into the panel Q&A. Thanks, Tricia.
Thank you, Caroline. Let me try to share my screen now. Okay, let's start. Hi everyone. Um, Thank you for the invitation. I would like to talk about the 2020 Asia market outlook. I think what I'm going to present today is we're going to look at some of the key themes that Colliers Research has so-called forecasted for 2021. How the world has changed due to COVID. The world went into recession last year. Now with the rollout of vaccines, the worst should be behind us. So the first and foremost theme that we see in 2021 must be a recovery. Most economies should recover in 2021. Among these, the APEC countries have done definitely better in their containment of the virus and should grow 6.3% in 2021, ahead of the 4.5% for US and Europe. However, it's not all rosy. I think the recovery is going to take some time. Global inoculation takes time, and the recovery will be uneven across countries as well as sectors. So some sectors such as aviation, tourism will take longer. Some sectors have actually grown because of COVID. In Singapore, manufacturing has been driven by robust expansions in electronics, biomedical, and precision engineering clusters. So I think this trend is also reflected in most of the world. The information and communication sector, basically the technology sector's expansion has been led by resilient enterprise demand for IT solutions. I think all in all, government support and interest rates, low interest rates should also help in the recovery. Next, we are looking at the second theme of sustainability and ESG, which stands for environmental, social, and governance. We have seen strong government commitments to actually combat climate change. The US under Biden and China have ambitious goals for carbon neutrality, as do Japan, South Korea, New Zealand, and other APEC countries. If you look at this timing, we all have these countries actually have relatively fast timelines to reach their net zero emissions targets. So in India, Prime Minister Modi has actually set a target of like 30 to 35% reduction in the country's carbon footprint by 2030 as well. So all in, Asia is actually is advancing in terms of sustainability. In fact, Singapore is actually voted Asia's greener city. Singapore currently has 3,000 buildings, or 40% of their total stock, which are already certified green. And its Building and Construction Authority, BCA, actually targets at least 80% of buildings to be green by 2030. But that's for the government. So what happens to the corporate side? I think 23% of the Fortune 500 companies globally have made a public commitment that by 2030, they will be carbon neutral using 100% renewable power or meeting a science-based target for emission reduction. So within APAC, however, there's actually scope for improvement. We have found that only 26 out of 220 Fortune 500 companies in the region in APAC have made carbon neutrality commitments. This is compared to over 30% for the rest of the world. So 12% in Asia Pac versus 30% for the rest of the world. I think in 2021, we should make more progress. Our global investor survey actually shows that most investors believe that ESG will be a very strong factor in their investment decisions in 2021. So ESG is not just about climate change and the environment. I think there's also focus on employee engagement and wellness and customer satisfaction. The next theme that we actually see, the third theme, really is triggered by COVID-19. I think it has triggered the largest work from home exercise globally. With the vaccine rollout, we start to ask ourselves, in fact, we get asked a lot, is the office still relevant? Do we still need office now that people are actually working from home or anywhere? So in Colliers, we actually strongly believe that office is critical to building a corporate culture as well as facilitating collaboration. So humans are social creatures. We need to socialize, and productivity is really much better when we do face-to-face interaction. Surveys have shown that while most people actually don't want to work from home all the time, they want some degree of flexibility. So office is still relevant. So the question is, how do we right size to really fit into the flexibility that the employees actually want? How fast and how much flexibility do employees have in order to return to work? So suffice to say that flexibility is in a pace, in a space, and a place of work has become de rigueur over the course of the year. So in our recent survey that's done by our workplace strategy teams, they surveyed over 4,000 occupiers. Over 70% actually envisioned workplace flexibility, some sort of workplace flexibility. 45% actually sees more flexibility built into traditional leases without material change to the length of the leases. For example, partial or full break leases, break rights, right to actually sublet for etc. 27% actually see more flexible workspace agreements. So we expect occupiers to actually use more flexible workspace for shorter term leases and expansion opportunities in 2021. They probably want to avoid excess capital expenditure and overcommitment in hub and spoke strategies. So we also expect to see partnerships between occupiers and operators of the flexible workspace as the former begin to reduce excess space from their portfolios. So different strokes for different folks. We can't say exactly which strategy that you should employ. There may be some kind of hybrid of work from work from anywhere model. So what is definite is that after the pandemic, environmental safety, security, and comfort is more important than ever. We have observed a flight to quality, more going for wellness certified buildings that optimize indoor air quality, provide acoustic and thermal comfort, maximize natural lighting, and provide high water quality. So if employees are to come back to work, they should be in a safe, sustainable space, maybe even in a flexible workspace. So the fourth theme is technology. This is not new. It has been growing for years, but it really accelerated in 2020 due to the pandemic. Enterprise solutions, IoT, automation, touchless sensors, robotics. Um, in most gateway cities, technology companies will drive growth. This table is actually very interesting. It shows that Asia, uh, Southeast Asia, not even Japan or China or India, Southeast Asia actually has a bustling tech scene. Singapore has over $60 billion worth of local fintech, prop tech, reg tech, whatever tech, all the unicorns that you know of. We actually have $60 billion of those in Singapore alone. Indonesia is actually not too far behind by virtue of its domestic population. It also has a bustling tech scene. As competition for talent actually increases in technology sector, occupiers will need to focus on workplace strategy to attract a talent and to retain the talent. So tech occupiers' workplace strategy can also be benchmarks for other aspiring choice employers. And I think we are definitely leading some of this innovation. So this is actually my last slide. I will end with this property clock on our APAC office markets for 2021. So good news for occupiers. Most APAC markets are favorable for tenants this year. As occupiers actually adjust their structure, their headcount, and adopt new work standards, we expect many to actually reduce their space needs. But it doesn't apply to all markets. Some actually promote the decentralization with hub and spoke models. Some markets may also have an oversupply at a time of a decreasing demand. So for example, in this chart, you will notice that Singapore is actually, we are expecting some sort of a recovery by end of this year because of the growing demand from tech occupiers. There's also limited new supply, as well as a relative better virus containment efforts. So I'll end here.
Thank you very much, Tricia. Just while I wait for you to close your slides again, thank you for that. And it was good to, sorry, fogging is going on. I knew that would happen outside my place. Hopefully you guys can still hear me. This is classic. Thanks, Tricia. And I guess as well as the relatively good news on the economic front for Singapore and for the region this year, it seems that climate change and sustainability has definitely moved up the agenda, at least for the public anyway, in many institutions, if not so much for corporates here in Asia compared to the rest of the world. And I guess that the second key thing to emerge from your research was flexibility, of course. And while it's been increasingly important for the past decade, it seems that, again, that conversation has now broadened to embrace not just flexibility in terms of location and physical space, but in terms of leases, I guess, and kind of legal ownership structures, the kinds of spaces that organisations might be sort of looking for in their portfolio, and also, of course, you know, most importantly, flexibility in when and how we work and with who as well. And I guess that kind of ties into your final theme a little bit about sort of technology and how that's been such a great enabler and going kind of gangbusters in the region, particularly in terms of homegrown tech. And I'm very keen now, I guess, to hear what our four panelists are seeing from their very different perspectives on these themes and other themes that they're seeing emerging within their kind of field of vision across Asia and also around the region. Just a reminder to all of our guests as well, if you do have questions, do please type them in the chat. I am keeping an eye on that. And please let us know if it is addressed to a specific panelist, please note that as well, just so I can direct the question appropriately. So very keen to hear from our panelists now. And I'm going to open with Brandon, from your perspective, I guess, given what Tricia's just said, but very much from your perspective, what do you feel is kind of different in 2021 compared to pre-COVID? And are we talking about new things happening here, new trends, or an acceleration of pre-existing industry trends that were in play before the pandemic?
Yeah, so thanks for the question, Caroline. And I think, aside from us all maybe having a new vocabulary, including words like, stay home notice and social distancing and herd immunity, which obviously a lot of us did not discuss very much pre-COVID, I think there's a lot of changes. And I think, first of all, I also think there's been quite a few changes between 2020 and what we're going to see forward for 2021. And so I'll touch on that first a little bit about, how 2021 already feels different and feels different than 2020. I can see the confidence and the decision-making happening much faster now already kind of in late 2020 and early 2021 as it relates to, decisions that affected our workplace and how we see the future evolving. There was a bit of a paralysis, I think, for much of, Q2 and Q3 with different businesses, whether in workplace related activities or in a number of other decisions. And really it was only making decisions that were 100% necessary. And so I think from a feeling perspective in 2021, we already feel like, things will evolve and move much faster, if I do kind of mention that. I think the other thing, that feels very different or feels like it's a catching up is definitely in the workplace space. I think if we look at other employee benefits, such as holidays, such as, various health insurance benefits, things like this. You saw in 2017, 2018, I was looking up a few different companies that had introduced more flexible policies around things like that. For example, Spotify in 2017 had brought in, a policy where basically, depending on your location, you could choose your own public holidays. And these additional layers of employee flexibility, I think, are just only being amplified and increased as we head into 2021, based on the learnings that we had from 2020. You're on mute, Caroline.
Sorry.
That's okay. And that's another new term that we all learned, very much so. You're on mute.
You're on mute, exactly. So, mute bingo, Zoom bingo. Thank you for that, Brandon. I think you picked up on a couple of key trends there. And one I wanted to pick up on, I guess, was the work style change. And a lot of that, and obviously us all being here on Zoom at the moment, very much speaks, I guess, to huge advances in kind of take-ups of technology and new demands for technology as well. So I'd like to ask Charles, I guess from your perspective, do you think this is pre-accelerated kind of, or sort of accelerated existing industry trends? Do you think things have come to market faster, or do you see there actually being new demand out there, which is generating, I guess, new solutions and new innovations in tech?
I don't think there's that many new solutions out there. There's things that have been available for years. We just didn't have a compelling event to get the whole ecosystem moving forward. So terms like IoT, smart cities, prop tech, you name it, they're buzzwords that have failed to live up to the hype. And what's happened now is you have the whole ecosystem moving forward in one direction, and it's making it a lot more interesting. All the solutions that we're using right now, the technologies to get people back into safe and secure workspaces, those have been around. It's not like they're coming up with them just off the top. They've been available for years. What happens now is people have an excuse to buy them. What's interesting is that we're in a situation when you look at real estate and buildings where it's a bit messy. Every building is going to have a dozen plus building management systems all running on different platforms. It's unmanageable. Now what we're going to do is add in a lot more of those types of platforms again, so you have more of them. Some of them are going to be things that might have regulatory or landlord requirements about ensuring social distancing. So we've now created a situation where we've even got more platforms, more data. That doesn't necessarily lead to seeing more, actionable intelligence. So I want to see how that's going to evolve. It does create an interesting opportunity. The one thing that I think has surprised me over the last, I would say, 9 months or so, is everybody has gotten into the platform of platform plays. And this is the idea that you can create a single platform above all those different BMS systems and aggregate all the data to give you a single version of truth. And it's not just I would say the leading vendors. It's a lot of the laggards, sometimes the regional ones that aren't as innovative normally. Everyone's starting to look at it. Obviously, they're not moving as quickly as I would like to see them move, but at least we're seeing some interesting people coming into the space. What I would keep an eye on is, yes, everyone's going down that path. There's a few interesting models that I'm tracking. The one I think is the most interesting is the partnership with Telstra and Microsoft about digital twins for buildings. They're going into the building space, not because Telstra is an expert in the space or Microsoft. The thing is, buildings have a data problem. It's not a real estate problem. And you're going to start seeing a lot of people coming into this space that have no experience in real estate, but they're experts in data. So keep an eye on AWS, keep an eye on Google as well. This is a space that's ripe for the taking, and they're seeing it as a good market op.
Thanks, Charles. I think that's actually a really segue into, I was going to ask Mike Smith, from your perspective, I guess, talking, and some of the things Charles picked up on were, I guess, to do with smart cities and infrastructure and buildings and those sorts of things. I guess, given your perspective as investor, developer, landlord, all of the above, and I guess your broader perspective as well. What are you seeing that's different in 2021 compared to pre-COVID, or is it just, again, acceleration of pre-existing trends?
Good question. I think, for our business, we've been quite fortunate that we can pivot around different asset classes. So we're a big owner and developer of warehouses and data centers, which has proven to be quite good investments given where we are in the world. But we are still very constructive around offices. So we've bought a couple of $1 billion of offices in the last couple of months across the US, Europe, down in Australia, China. And being a sort of a pure developer, mercenary capitalist, it's all about the returns that we can achieve. And the very boring location still counts. We own a building next to Vivo City, which is the St. James Power Station. We went through a pretty significant refurbishment to have that as our global headquarters. But maybe because it's St. James Dyson decided that they wanted to have it. And they have taken the whole building, and we've delivered them a very empty shell that's got great lighting and air cleanliness and all of the sort of wellness features that they require, but they're going to do all their fit out. So we'll provide them the sort of hard shell and then let them sign a long-term lease with us, and then they can effectively do what they want in however way they want it. So that's sort of where we try not to get too involved in what the tenants require in terms of what they specifically require around their space. But as long as we're building or providing them a great shell in the right location, then they tend to be quite happy.
Yeah, I'll come back to some of those specific points later, because a couple of things, I guess, piqued my interest from Trish's research. But just while we're on the topic of location, we obviously know Asia is not homogenous. And while we're talking here about sort of Asia market and, is Asia ahead or behind, we know that all the markets are different. So I guess, again, from your perspective, Mike, are you seeing, I guess, of different trends or faster innovation or developments? I guess, is Singapore different from the rest of Asia? Are they all moving at a different pace from your perspective?
I think the more sort of the more forward-leaning economies such as Singapore, Hong Kong, just generally development standards, regulatory standards, etc., are just easier than if we're developing in Vietnam or China. I mean, it's just it's not a surprise that the more advanced economies have better practices as it relates to building. But other than that, there's nothing, we do a lot of development in China. We're building 50 warehouses at the moment across China, and we know that we need to build the biggest possible shells in the best locations, and somebody like a Google or a Baidu or a JD.com will lease it if it meets their specifications, and then they'll do all the fit out. And the more they spend inside the building, the happier we are, because that probably means the longer they'll stay so that they can appreciate all of the fit out that they put inside the building. So it's a pretty simple model we have. We're not as technologically as advanced as a lot of you guys, but we try to make sure we build the right shell in the right place. And that isn't consistent across Asia, as you said. But in the markets that we operate, we've been there for a while now. We try to make sure that our people on the ground are at least as sophisticated as they can be by transferring technologies and understandings across jurisdictions.
Excellent, thank you. And while I guess while we're on that, I'm going to circle back to Trisha now. Trisha, obviously with your research, there was some relatively good news there, I guess, in terms of Singapore and how it's going. But obviously you've got a lens across the region as well. Are you seeing that from Collier's research, the recovery is going to be relatively consistent around the region? Or again, do you think Singapore is perhaps fortunate in some of its areas or moving ahead faster or slower than other places?
I think in Asia, we're actually relatively so-called fortunate. I think, and unfortunate, I guess. I think Singapore is actually the developed city. So in terms of the growth, you will see that it's actually not going to be as strong as the overall APAC growth. APAC's growth is still going to be anchored more like more by countries like China. I think China is still going to post the highest growth in Asia, just because it's still developing and it has a very large domestic population. It's still and it has also recovered relatively faster from the pandemic. Because they were the first to get it and they had actually controlled it relatively well. So they were the first to actually recover. So in a way, APAC is going to lead the world, but in terms of the leader, really China is going to be the one that has the fastest recovery. But I guess in terms of the other countries, as we mentioned, even guys like Vietnam is actually not doing too badly. And Singapore, I think Malaysia might have a bit of a problem, but overall APAC as a region is going to do relatively well compared to the rest of the world.
Thanks, Trish. And I think actually that quite nicely answers Steve Louis had a question before about will Asia leapfrog innovation in real estate, or are there stronger frogs to watch? And I think, Tricia, you've probably answered that quite well. And thank you, Steve, for being the first person to put up a question. We can always rely on you to have something to ask or something to say. So thank you for that. There are a couple of other questions here, but I think I'll just leave those and let the conversation get into a little bit more detail first. One of the things I guess I wanted to ask, building on, I guess, those aspects around location, I guess the overall positivity around Asia, but also the lack of homogeneity. Brandon, coming back to you. What I guess is, exciting to you when you have a look at, I guess, the opportunities that lie ahead, I guess sort of not for your organisation, but for organisations in general, around Asia. Are you seeing that there are, from your regional perspective, are you seeing different changes in terms of, I guess, competition, innovation, kind of moving forward quickly, trying to take first mover advantage in different areas?
Yeah, I think, definitely to your point, each market will be a bit different, and we're definitely seeing that as it relates to COVID and the recovery as well, right? I think what we forget a little bit living here in Singapore, where, despite the fact that we're doing this virtually, a lot of us have gone back to what we can call some level of new normal. Whereas, a lot of other markets across Asia have not necessarily experienced the same level of comfort or reassurance that their health and safety will be okay. If we just look at Malaysia, for example, they've gone through a number of different MCO periods and government mandated stay-at-home notices, which therefore affect, I think, how people behave and potentially what we see as the new normal going forward in the future. That being said, Caroline, to your question, are there markets that are, let's say, bright spots of that situation? And I think one that comes to mind is maybe Australia, and maybe Australia more than New Zealand, but Australia in particular. Because, I think Australia, from a work style perspective and a workplace perspective, had always had this kind of change in working patterns and additional remote working kind of on their doorstep and ready to be taken. But to the point that Charles has made earlier, there's now a more compelling case to consider it. And the uptake I see as kind of more convincing. If I look at some of our own occupancy data, despite the fact that things in Australia have been relatively stable for quite some time, we haven't seen the return to office in the way that you would expect for a country that hasn't necessarily had COVID be the primary focus for all of 2020. So I think, depending on the location, you will have different changes. And in China, for example, things never really changed. I think China has just kind of steamed through 2020 despite a lot of the changes. I think one thing to build on maybe more of a question for Michael and Maple Tree strategy, he mentioned location is still important, and I 100% agree with that. I think maybe the question that I have for Maple Tree and just landlords in general, right, is a little bit about that asset mix consideration, given the massive changes that we can expect to see in just worker populations, right? Depending on when we look at more developed economies, the way that the remote working kind of, let's say, revolution could impact how people shop, how people live, and where they live and where they do their eating and things like this could really affect the asset mix required. And so just wondering, sorry, Caroline, to ask a question, but this is just something that I think, has been on the top of my mind as to whether that asset mix is going to change in the near future and therefore needs to be reconsidered. Doing 100% office in the CBD plus a little retail podium where people could have lunch is maybe not necessarily the right mix anymore.
Over to you, Michael. I'll put you in the hot seat.
Yes, I am. Great question. Look, we've been quite fortunate globally in not buying office buildings, sort of trophy buildings in downtown type locations. Maple Tree Business City, where I'm sitting at now, where Google has their Asia Pacific headquarters, this is the type of building that we like to build, which has a lot of open space. There is some ancillary retail, but it's very green and sort of lush. We've got one in the UK, we've got one in the US, we've got some in Australia. This is the sort of product that we like to build, and whether it was good fortune or good vision, that's our sort of sweet spot, and that's proving to be a very, very good sweet spot right now. We know in the UK we have a big business park called Green Park because it's very green, but in Reading, we've just signed a very big lease with a big telecom company. Amazon's about to sign a lease. And these are guys who previously were in London City, but much of their workforce now doesn't want to be on a tube for 2 hours or however long it takes to come in and out, get to a downtown building and then wait in an elevator queue for 20 minutes to get up the elevator because of social distancing. Going all the way out to Green Park on train, it's got sort of low-rise 4 to 5 story buildings, lots of underground car parking, there's a station right next door. So all those features are becoming more more important to tenants, I think. So we've been fortunate. We probably won't change our business because it's proving to work through it. But yeah, we are always on the lookout for what's next, how things are changing and how we can pivot. With real estate being such a heavy capital intensive product, it is sort of hard to pivot. Once you've decided to spend $1 billion somewhere, it's hard to change that very easily. So, but as long as we keep trying to analyze what is our ultimate client tenant requirements, we try to build to ensure that we meet those as best we can.
Thanks, Michael. While you're still in the hot seat, there actually is a specific question here to you, which picks up on Trisha's research, which I think was about 45% of occupiers were looking for greater lease flexibility. There's a question here from Jason Lamb saying for you, what impact do you see these new tech short-term flexible leases having on property valuations or kind of cap rates?
Yeah, good question. We were never, we watched sort of the WeWork expansion and explosion. We, as a big office landlord, set up our own business called Cocoon. We didn't think we needed to lease space to WeWork, so we created our own. Ultimately, if you own the real estate, you can create these type of businesses to provide startup companies and people who want sort of short-term, more flexible leasing arrangements. So, we've met that market, but our preference is to sign 20-year leases to Google. Our investors who buy our public vehicles or who buy our private vehicles want longer dated leases to high quality covenants, rather than shorter dated leases to a startup company, which may or may not be there in the end of the lease. So, our preference is the conventional long-term good quality covenant, but we are, adjusted in part by creating a business around the changing needs of the more flexible tenants.
Thanks, Mike. You mentioned, obviously while we're on the subject, I guess, of WeWork and co-working and those sorts of areas, I'm going to go back to Charles. Charles, do you think that specifically the desire for greater flexibility for co-working from work from home has accelerated demand for certain kind of technologies? And are you seeing, any competitive advantage within Asia in terms of developing some of these technologies? Are we ahead or are we kind of lagging the rest of the world here?
A lot of the technologies you need to create that type of an office environment have been around, the meeting booking system. So it's not like this stuff isn't rocket science. With the more complexity they have is how are they going to ensure more on the things around social distancing? How are they going to make sure they create a safe and secure environment? That's where I think we could potentially start taking some lead. I'm sorry to jump in on this one, but I saw the question from Turnshot that I just want to address this. The investment side, I would actually put it back to you. Do you think that the investors in these buildings always do use the best available technology? And I deal with quite a few of the larger players in that space because we talk about technology, especially when it comes to things around green buildings. And they don't invest in the best because there's no premium associated with it. They invest in what they need to do. So we need to have tighter requirements and regulatory issues around this or regulations around this to almost push people down that path. Because we could be making a lot more green buildings than we have. I mean, we're doing okay. We could be doing a lot better across Asia. It's going to require regulations to come in to actually force their hand to do it. Because if they don't have to, or they don't see a premium on it, why would you always invest in the best? Doesn't mean they're putting up like substandard buildings, but it means you're not investing in the greenest technologies available.
Yeah, and I think, Charles, that brings me, there's another question up here as well. And I wanted to pick up on, again, some of Trisha's research. And I guess the quite disappointing, I think it was 12 or 14% of Asian organisations pledging, around carbon neutrality or sustainability by 2030 compared to, I think it was over 30% globally. There's a question here from Suchita asking, will world building certification for both occupiers and investors be more sought after, seeing as sustainability and ESG is an area of growing importance? So perhaps, Trisha, I could pass that to you initially.
Hi. Yeah, I think definitely is actually much more important. I think definitely we have done surveys, and in both investors and occupiers have said that it's definitely going to be more driving their decisions in terms of occupiers as well as investment decisions. And based on our research, we actually find that having green buildings definitely will improve the the utility bills, improve in terms of the well-being of employees. So it's not just that tangible benefits. So I think more employers as well as investors will actually likely to look at those benefits. So I think the government support is actually very important. I think what Charles have said is definitely we need more government support, and all those pledges definitely will drive more decisions towards doing the right thing. I think it's about doing the right thing.
Yeah, and just picking up on that, Brandon, I guess from your role, you're obviously able, I guess, to see what employees are looking for, not just within your organisation, but I guess around the region. How high do you think that sustainability is getting on their agenda? Because obviously that's a large motivator for organisations to actually, put their hand in their wallet and do something. And do you see that as being tied with the whole focus around, I guess, wellness and health in those areas as well, or do you see them as being quite separate issues in employees' minds?
Yeah, I think definitely environmental is 100% a motivator behind, or let's say a bit of a side benefit of some of the changes that we're seeing in occupancy and just, the overall utility usage in an office building or in a particular facility. And definitely the smaller footprints can also help with that impact. I think, a lot of companies historically have done a pretty good job at looking at their own carbon footprint, but they haven't necessarily looked at some of the larger companies or manufacturing-based companies have looked at their supply chain also to figure out where the major carbon impacts are. But, I think an area that could be quite interesting to consider now is actually, what is our employees' impact on that particular carbon output, right? I can attest from my own usage that, my own carbon output from a energy perspective in my home has gone up substantially as a result of COVID. I think most people have seen it reflected in our air conditioning bills. But, the looking at that, and then how is this going to be measured or controlled or considered within the larger environmental agenda? I think to your question about, is it an important consideration for occupiers? I mean, once again, 100%. We're looking constantly at ways, as well as other occupiers that I know, looking at ways to reduce those carbon emissions. And largely this is set because of those commitments that our organization has made. I'm not sure I've seen very many employees come forward and say, okay, this is something that I want in order to consider the company. I haven't necessarily seen that yet, compared to, let's say, something like health and safety related issues, or let's say ergonomics at home or ergonomics in the workplace or something like this, where we see the demand and the request for that to be very high and very important as it is. But I haven't necessarily seen it driven by the associates yet. I think in the future we probably very well will, but definitely still important.
Yeah, no, I think from an organisational point of view, it certainly seems to be coming up the agenda, but I guess with a lot of pressure on balance sheets, and revenue this year as well, a lot of organisations are trying to work out just how they meet those sorts of targets, or respond, I guess, to employee needs, and do that within a way that's kind of cost effective. I'm going to come back to, well, I guess, staying on that topic, and I guess sort of reflecting one of the questions in the poll. I'm going to come back to you, Michael, again. I guess, so in terms of those areas, obviously the occupiers themselves have a huge impact on the actual, I guess, energy use of a building, on obviously their own kind of waste and those sorts of areas, but the building infrastructure itself, and we know the building industry globally accounts for a huge amount of carbon emissions. I think it's somewhere between 20 and 30%. Others probably know that number better than I do. But does Mapletree have targets or goals around its, I guess, sort of energy footprint in terms of buildings? And do you see that being different or more easily achievable, I don't know, maybe in places like China, where there's been a lot of, I guess, accelerated investment in green cities and smart cities and infrastructure?
Look, I think we do. I should know the answer, but I'm sure we do have these type of targets. I know some of the initiatives, we own a lot of warehouses across the world and putting solar panels on the roofs of our warehouses. But I also think just from our perspective, building for somebody like Google or Dyson, they have such high standards of building requirements, whole armies of engineers, that being able to do that for them and getting them to sign a 20-year lease on the back, but we learn a lot from their requirements, and then we can repeat that. And then the reputation starts building on itself, that if we had a building that we built in Dublin, in Ireland, Google was supposed to occupy it, COVID and a whole bunch of issues didn't allow that, but now I think TikTok or ByteDance is probably going to occupy it. So, you know, it was sort of good enough for Google. They sent all their engineers through and it was in the right location, had all the right requirements, and now another quite large technology firm can pivot into it. So, but no, look, it's absolutely critical to every company about sustainability, and you know, we just have to ensure that we play our part.
Thank you. And while we're talking about, I guess, about sustainability more broadly, Charles, I know you've done a lot of research and kind of talking around smart cities, and Singapore obviously, you know, is trying to promote itself, I guess, as a smart city. What's your take, I guess, on how cities and urban infrastructure and technology and sustainability kind of all come together? And is it a happy marriage, or are we kind of headed for some challenges here?
It's interesting you asked that today. I just put out a video this morning, and I know Wendy's probably smiling. I tend to be quite the pragmatist when it comes to smart cities. We don't even have a common definition of what a smart city is. The challenge we face is they're so big, they're so complex. I like it when people break it down in digestible chunks. You start going after smart districts or mixed use facilities, and you try to do it from there. It is getting a little bit better. You're seeing people start to learn that they need to collaborate more. But we need it a lot more. And I mean, we need ways to be able to test innovative new solutions in a quick and timely manner. A lot of cities around the region, it can take you 2 to 3 years to run a proof of concept. That's not really going to work going forward. So I tend to like models like Taipei's got a really good model for driving innovation quickly. There's some other interesting things going on, some new PPPs. So there's one that's just been announced with Songdo and Incheon in Korea, partnering with Stanford University. And basically, they're going to get access to all the city data. And it's a perfect PPP because it's not like partnering with Google. You're partnering with Stanford. They want to learn from it, so they're going to share it with you. Google just wants to monetize it. And that's what I'm staying very close to. I'm talking with the team up there a lot about this, because we need this. We need people to just figure out, how do we drive new solutions that either reduce costs or streamline a business process, or potentially how we use that data to generate revenues, but in a safe and secure manner that follows, you know, ethical guidelines as well regarding the data. So cities are complex, they're overhyped, they're very, very difficult to deal with when you try to do it at the high level. So I always avoid those. I tend to look for smaller projects because that's where you can actually deliver something.
Yeah, no, that makes complete sense. And I guess just sort of following on from that, I saw that Wendy just put, I'm assuming that's your video. Yes, it is. So for anyone that's interested in Charles's video, go and have a look in the chat. There's a link to that from Wendy at BritCham. So yes, I'll have a look at that as well afterwards, Charles. I guess sort of
it's just a 6-minute complete and utter rant, but it should be kind of amusing.
Oh, that's good. That's kind of within about my attention span. Anything longer than about 6 or 7 minutes, and you know, something else is distracting me. So it sounds like a perfect length. I guess sort of while we're talking about that and around, I guess, cities and development of cities, and Michael, you picked up on a couple of things a while ago with some of your, I guess, you know, green developments, I guess, and sort of those sort of more integrated or mixed use type developments. I'm going to sort of pull that back to Brandon again and ask a little bit, I guess, about talent strategies and how perhaps, you know, work from home, remote working, distributed, you know, work from anywhere is perhaps having, or I guess perhaps how corporates are starting to look at those sorts of aspects and I guess give people more choice around whereabouts they can live, you know, their choices around what cities or what places they might live in. Is that something you're starting to see emerging on the corporate agenda? It's been bubbling away for a little while, but what are you seeing now in terms of trends or accelerated trends?
Yeah, I mean, we've seen a number of high-profile company announcements about changes to their employee location strategy. I think most recently I saw Spotify announcing that they will allow people to work anywhere, even to the extent that they doesn't need to be a Spotify office in that particular location. They're even willing to provide co-working memberships to their employees if they want to go to an office in a location where there is not a Spotify office. So, pretty extensive flexible benefits for associates to provide and choose where they want to work. I think it's interesting to see, and I think it really depends on the activities and the tasks of that individual person, right? Because at the end of the day, remote working is not something that works just for one particular occupation, right? It depends on the tasks and activities that person has to do. People report obviously very strong benefits for working remotely when it comes to things like focus work, when it comes to even being creative individually. But when it comes time for managing up and managing down and managing across, they have significant challenges. And I think, long spans of not being able to have that physical interaction that the location offers you will eventually impact people's careers and therefore drive them back into the cities that they maybe might have left when that wasn't necessarily the thing. I read an interesting piece that rents in San Francisco are down 24% for one-bedroom apartments over last year. A huge number and decrease compared to, I don't think we've seen such dramatic changes in Asia, and I don't think we will, because urbanization will continue as more, people's jobs shift from tertiary or second-tier cities into first-tier cities. So I think that densification will continue. But I do think, from an employee retention and attraction strategy, depending on the functions and the individual tasks of that employee, definitely you need to be offering that flexibility and providing that flexibility in order to be competitive as an employer. And like I said at the beginning, I really see it as just a catch-up of various other benefits that companies offered to their employees that were more flexible than they were previously. And this is just one that's catching up. And hopefully, Asia, given the fact that we have had, I'd say, a slightly easier time with COVID in certain markets than others, will lead the way in terms of that change. But that I think is still a bit to be seen at the moment.
Thanks, Brandon. I think it's quite a nice positive note to kind of, segue into my final question, which I'm going to ask each of you panelists. So Brendan, I might stick with you first. And I guess that is from a professional perspective, sort of leave the, personal, the beaches you might like to lie on, or where you might like to go surfing or scuba diving, or where your family might be or whatever. But from a professional perspective, if you could choose to be doing your job anywhere in the world right now, where would it be and why?
Did you say leaving my personal biases behind? Is that
yes, please.
Okay.
unless you're quite keen to share them, in which case don't let me stop you.
No. If that's the case, then then being in a city or an urban area 100% is going to be my first choice. I think, and even to be more specific, definitely Singapore or another large Asian market being in today's world, right? I would say, if I do bring some of my personal biases into it, I think the world's travel restrictions have been a bit difficult for a lot of people, including myself. So would I like an extended holiday or time away from the city? Maybe. But for now, if you're asking me about my personal career preferences, then definitely an urban environment. Maybe, I'm in Mapletree as well, Michael. So, another Mapletree property somewhere else in the world, who knows?
Thanks, Brandon. Trisha, I'm going to ask you the same question. So from a professional perspective, if you could choose to be doing your job anywhere in the world right now, where would it be?
Yeah, I think definitely in Singapore. I think from my presentation slides, you see that I feel safe, technologically empowered as well, and the government responses to safety and sustainability have so far been on point. So I'll stick with Singapore.
Thank you. Charles, what about you?
I'm boring. I just got my next 5 years of my reentry permit done. So, I'm 11 years in. I'm not leaving Singapore. Although what I would say is if we were going back to Circuit Breaker 1 and I could have spent that time living in Tokyo instead and seeing a little bit of mountains again, I would have done that, but I had to come back here when it gets going. I miss mountains, and I'm sorry, but just seeing it on a computer screen doesn't do it for me.
Yeah, I'm with you. I've seen, being in Singapore for 14 years, I seem to have developed a personal fetish for cold weather and or mountains, preferably both.
I grew up in Chicago, so I don't have that cold weather fetish at all. The weather doesn't bother me at all. I'm fine.
Exactly. And Michael, if you could choose to be doing your job anywhere in the world, from a professional perspective, where would it be?
I work ultimately for the Singapore government, so it has to be Singapore. So no, but I think
that's a politically correct response.
Absolutely politically correct. But from a time zone perspective, not when you could travel, Singapore's a great place if you're looking at a sort of a global business, in terms of the airport and the airlines, etc. But even from a time zone sort of managing the US and Europe, Singapore's quite convenient in that respect. But more personal, I have a resort in New Zealand that I haven't seen in over 12 months in the South Island, and I'd love to be down there in New Zealand. There's no masks, there's no virus. It's a strange world to be in. So if I had an opportunity to be down there and still be able to do the work, I would probably choose that.
Thank you, panelists, for sharing, I guess, a little bit of the personal as well as the professional. I think, we are all, a lot of us, I guess, are struggling a little bit with the lack of ability to travel and see people. But I think that's a pretty, overwhelmingly resounding vote for, being in Asia at this time, and more specifically being in Singapore at this time. Certainly from a professional perspective, I think, we're pretty fortunate. And I think all of the perspectives that the panelists have shared with us have certainly, I guess, highlighted, a lot of areas where, somewhere maybe Asia is lagging a little bit, but where there's certainly a lot of momentum that's building, and areas as well where Asia is certainly, powering ahead, and there's a lot of motivation, a lot of energy being put behind certain initiatives and to continue to move ahead. So with that, what I'd like to do now is move into the breakout sessions. We're going to randomly divide all of you into short breakout sessions just for 10 minutes before we wrap up. It's an opportunity for you to mingle with your panelists. They'll be also randomly put into the sessions. What we'd like you to do is when you are put into your session, as we said before, please introduce yourself if you're not already known to everybody in the group. And perhaps as I guess, a bit of an icebreaker and a bit of a discussion point, think about, I guess, what we've just heard from the panelists and including obviously the research from Tricia. From your perspective, do you believe that Asia is kind of ahead or behind or about the same as the rest of the world? And I guess how might that play out in the various nuances, again, as we've kind of discussed here in the panel? A reminder as well, if you haven't already got your video on and you're looking relatively decent, then please turn your video on. It'll just make it a more enriching discussion for your colleagues as well. And these sessions are not facilitated, so while you'll see us and the panelists in there, it's just essentially a networking discussion. So with that, we'll break into those sessions and we'll see you back in about 10 minutes. Okay, just waiting for everyone to come back. I think everyone pretty much should be coming back out of their rooms now. So what I want to do just in the last couple of minutes, I guess, is I don't know what, we just had a really interesting discussion in our breakout. We went completely off piste. We started on track and then we went off piste. So I hope you all had really great discussions in your breakout, whatever you discussed. But what we'd like to do, I guess, building on that, is just do a very quick poll based on that breakout discussion room topic. So if Emerald Tech Team can just start to share that first poll, please. If everyone can just go ahead and click on the screen, click your response, and when we get sort of most of them in, we'll close it out. So the question was, again, is Asia leading the recovery? Do you think we're kind of ahead, behind, about the same, or does it depend? And if you think it depends, perhaps tell us why in the chat function, please. Here we go. Wow, that was pretty bloody quick. Looks like everyone pretty much agrees with the panelists here that Asia's pretty much ahead. I guess in Singapore is a pretty good way to go. I'm just looking to see if there's anything. There's a few it depends. I can't see anything in the the chat room, but it sounds from that no one says behind at all. So I don't know whether that was everybody was just being politically correct, or we're all feeling really positive about it. But certainly it seems to be that we're all, you know, pretty happy that we're in a good place here. So that's really interesting to see. You know, and I hope from that perspective, you know, again, that you enjoyed, I guess, the different perspectives and I guess the more nuanced, I guess, insights that the panelists shared with you. So just, I guess, in terms of closing then, I'd like to obviously thank our panelists again, Tricia, Brandon, Charles and Michael, for taking the time out of their busy schedules to, you know, to share your guys' insights on these different topics today. Thank you again, of course, to CoreNet Global Singapore Chapter and also to BritCham Singapore and the Build Environment Committee for collaborating with us to bring this session to you today. And of course, as I mentioned at the start, thank you very much to our chapter sponsors. And I guess finally as well, thank you everyone for sort of joining the discussion. Just before we break, we want to do another quick poll and just ask you for some feedback on the session. Both CoreNet and BritCham are always looking at improving the quality of the kind of events and the content that we share with you know, our members and other guests. So just as we close out, if you could quickly share your feedback, please, today on the poll. It's just up on your screen now. So thank you again, everybody, for joining in the discussion. We had a really large group of participants here. Hope you all found something in it to take away. There certainly was a lot for me to think about from that session. So thank you again for joining, and have a great rest of your afternoon.